Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode 215. Your account is down. Now what? Cory, thank you for joining me back on another episode of Upticks.
Of course. Thank you for having me here today, Jake.
It's been a few shows. So before we dive into today's topic, which is a very important one and a very popular question, is there anything new in your life?
Not too much that's new, that is new. Just playing some tennis, trying to play some platform tennis now that the weather is cooling off. This is when the season really gets started. So just spending some time on the courts and spending some time working. That's it.
Got it. Well, not a bad groove to kind of get into. And for our viewers that don't know, platform tennis is not what you think it would be. And when I hear platform tennis, I think of ping pong, but that's not what it is. Will you just give us like 2 sentences on what platform tennis is?
It is an outdoor racket sports game that is played in the winter on a court that is smaller than a tennis court. The big difference between platform tennis.
4 sentences.
Well, there's some commas in there. I didn't use some explicit periods, but it's a game that's played in doubles, and it's played basically in a 15-foot tall cage. So you play the ball off the screens around you. So it's more quick moving, and there's a lot of strategy involved.
So would you describe it as kind of like outdoor racquetball? Kind of?
Kind of. There's some elements mixed in, but unlike racquetball, where you're playing the ball off the wall, this game is much more like tennis in that you don't want the ball to get by you. It can only bounce once. The big difference is if it does get by you and it bounces up off the screen, you can keep it in play.
All right. That's too much.
That's the big difference.
That's too much. I just wanted to hear what So again, what's kind of crazy about platform tennis though is that they play it in the winter. So the courts are heated. So you crazy guys will be out there in 10-degree weather, right? I mean, what's the coldest you remember playing platform tennis in?
About 8 degrees. Was
it fun?
Not really.
All right.
The game was fun.
Thank you for your honesty on that one.
I know my limits.
So again, same with me. I'm kind of squeezing in some more rounds of golf as my viewers. And I find it funny, some of my clients comment on how much golf I play, but I do work quite a bit, actually. Still putting in long hours in the office, obviously, certainly during times of volatility. But squeezing in some rounds of golf. Fall's a fun time to play golf in Kansas City because the temperatures start to get a little bit cooler. And before you know it, winter will be here. So you got to make sure you get it in before it gets too cold. And then the crazies can play platform tennis all winter in there.
That's right.
And again, thank you for tuning in. If you're not already subscribed on YouTube, please do so. If you're listening to this on your favorite podcast platform, I would encourage you to subscribe, like, and share our content. Obviously, the name of this show is Upticks. Cory has his own show called In the Money Insight. You can find it on our same Falcon Wealth Advisors collective YouTube channel. And then he's got his own podcast on Spotify and Apple iTunes. But again, for today's topic, it's a pretty serious topic. We're going to make a little bit light of it. Because we've been through this a lot. But I want to just challenge our clients to think a little bit differently. So again, your account is down. As of the recording of this show, and it takes our compliance a while to get these things published, but as of the recording of the show, Cory, the S&P 500 is down over 20%. The bond market is down around 15%, and the international markets are down around or over 25%. And so for many of our clients, they're invested in all 3 of those categories. So of course, their account is going to be down. In fact, year to date, probably the best place to be would have been in cash. But even if you look at current inflation rates at around 8%, cash is still yielding a negative, what's called a real return. So if you back out inflation, if you're sitting in cash, you're actually losing purchasing power. So you're losing money there too. So really, there's no place to hide. And to kind of give a quick market update, why the market's doing this as well, you have to remember we're coming off the tail end of a pandemic. 2020 and 2021, the market was actually up during a crazy, unpredictable, unsettling, nervous environment. And the stock market actually was up, which is a little bit weird to begin with. And so now this is the backlash of that growth. There's a war with Russia and Ukraine. Inflation is now out of control because of all the stimulus that was pumped into the market. The Fed is behind, and they are aggressively trying to raise rates to cool inflation. And let's not forget, we've got a midterm election coming up, which normally creates some volatility on a normal year. So you put all that in a pot, you put all that in one year, and we would expect to have some volatility. Of course, we don't like it. We didn't expect it to be of this magnitude, but it doesn't mean we're hitting the panic button. So for today's show, Cory, we wanted to talk about things investors and clients should be doing right now, literally right now, since their account is down. And we haven't compared notes. So I'm gonna, as my guest, I'm gonna give you the courtesy and let you go first. And so we'll go back and forth. I don't want to overlap. So again, once you say something, I can't use it. It's kind of our game that we're gonna play today with this serious subject to kind of make some light of it. Now, of course, we can add on to each other's, but if somebody says it, it's taken. So Cory, your honor.
All right. So to get started, if you are watching this or listening to this and are concerned about the markets, given what has materialized this year, one of the first things that I would encourage people to do is to talk to their advisory team that they work with. In the midst of the environment that we are in right now, we certainly recognize that it's not fun for people, that it's scary for people, and there are naturally concerns that people have. But I think in working with a professional and a fiduciary with a team of professionals that are managing these affairs for you and your family, times like this are exactly why you're working with that team. Right now is when clients need our advice, Jake, frankly, more than ever. And if people have concerns about what's going on, I would encourage them to begin by talking with their advisor, with their advisory team, and understand what their financial plan looks like.
Good one, Cory. I love it, right? And maybe that's obvious, and maybe that's not obvious for everybody, though, right? So what Cory's getting at is don't sit at home and fester. Don't freak out. Don't get in arguments with your spouse or your coworkers. You have hired, or maybe you're watching this and you haven't, but if you have and you've hired a fiduciary, independent-minded wealth advisor, this is what you are paying them for. So Cory, you're right. Call your wealth advisor, set up an appointment, and let's go over some facts together. And most importantly, and this kind of parlays into mine, so I'll count this as one of mine too, but let's look at that financial plan, because that's what it all boils back to, is your plan. And a fun fact for you, Cory, is that over the last 15 years, the market has only had negative returns for the year twice, which is interesting to me, and will lead into my kind of thing to do right now. But it's that people get so panicked and they get worried and they think the end is coming. But you have to remember, we've had a lot of horrible events over the last 15 years, right? From, I'm sure there's been terrorist attacks or horrible attacks on humanity. We had the pandemic, we had the financial crisis. Let's not forget about that, right? So there's been a lot of things. We've had good presidents, we've had bad presidents, whatever way you look at it. There's been geopolitical risk. There's been all kinds of, there's been hurricanes, like there's been all kinds of things happen over the last 15 years. And the market's only had negative returns twice. And you know what? If in 2022, we have our third negative year in 15 years, that's okay. I'm still loving the returns that the market has had over the last decade plus. And so that'll leave me, unless you wanted to add anything else before I go into my item to do right now.
Yeah, let me just ask you a question. If Jake, if somebody sets up a meeting, evaluates their financial plan, understands everything that you and I are just talking about, what do you tell someone whose financial plan looks materially worse than it did, say, a year ago?
Well, I mean, frankly, it shouldn't. I mean, if their financial plan is that unstable, I mean, it's probably gonna look a little worse, because if you think about it, if we have a projected rate of return of 7% or whatever it is, and they're not achieving that this year, I would expect everybody's plan not to look the same as it did a year ago. But if it looks material worse, then we want to unpack that some more. Was the plan kind of tight to begin with, and what are some behavior changes that we can make? If we need to adjust the allocation, we will, but I wouldn't do that based on panic. But have you seen that? I don't think that happens, Cory. I really don't think that happens that often, but have you in your meetings?
Maybe I should have just left the word materially out of my question. Because
Yeah,
yes, exactly to your point, we've seen clients whose financial plans don't look as strong because they're starting their account values today are lower than they were a year ago, which makes sense. But to your point, if it's that tight in the first place, it might be a good time to reevaluate what behavior changes need to take place.
good. So you tricked me.
Wasn't my intention.
Well, you did. You're right. Because I don't see, again, the plans look different every single day. And that's another quick point is that some clients think that this plan is a roadmap, right? And it's not a roadmap. Maps don't change unless somebody builds a new road, but that doesn't happen very often, right? So not at least in Kansas City, but plans do change. It's not a roadmap. Your plan is not a static document. It's a living, breathing, changing, evolving document. And that's why it's so important that you meet with your advisor. And so like your first point is if you are worried, you should call and set an appointment. And certainly we are proactive with our clients and we're reaching out to them anyways. But if you're worried and it's in between meetings and you want to meet, let's meet. That's what we're here for. Okay, good. So going into what my point is, or my tip is to stop. It's funny. I've started to have some conversations and people think all of a sudden that they can predict the future. And I'm just encouraging and challenging our clients to stop doing that. You don't know if the market's going to keep going down, right? You don't know that. Just like I don't know that. And Cory doesn't know it either. And so you need to stop. You need to zoom out and recognize that you, CNBC, Fox, CNN, me, no one on this planet can predict the future. So stop trying to claim that you can. And that's what I really am challenging our clients when I do have these phone calls. Someone will call me and say, well, the market's going to keep going down. How do you know that? You don't know that. I don't know that, right? But what I do know is that investors who have exercised discipline and patience have been rewarded. And again, past performance is no indicator of the future either, right? So we can't even use past data to try to predict the future. And if I could, I would, but you can't do that either. But all I know for fact is that patience and discipline have rewarded investors. And another point to always remember is that for our clients, money that you have in stocks is for long-term capital appreciation. So stocks are down the worst this year, but that's okay because that's your long-term bucket. Now your bonds are down too, which we don't like, and we'll get into that here in a moment, I'm sure. But you have to zoom out and stop claiming that you can predict the future. And please don't ask me if I can. Of course, I'm always going to give you kind of my feeling, and I'll tell you what needs to happen for the market to turn around, what I think. But I can't predict the future, right? And clients actually, a lot of clients will ask me that with a grin, like, what is your outlook? And they'll always put that with a caveat, like, I know you don't know, but what are you thinking? I'm happy to give you my thoughts, but stop thinking that you know what's best for the stock market. It's a foolish claim, and it's okay because you're letting your emotions mask your rational decision making, and that's what, again, one of our jobs is to pull you back from that ledge or that window and say, stop. You can't predict the future. What are you doing? If you could predict the future, then you should go play the lottery.
Right.
Go pick the right numbers. Then all your financial problems will be solved. Right.
Yep.
Cory, did I miss anything on that? It's a little soapboxy, but I really just want to be a challenger here and a coach. I want to say, stop claiming you know what's going to happen. You don't know. You don't. And that's okay. Really the good news is that's okay. But go ahead.
Yeah, no, that's really good. I think it just speaks to when things are uncertain, people get concerned. And just like you said, a lot of that is emotionally driven. I don't know very many people a year ago that were predicting that 2022 would play out the way that it did. But now that we find ourselves where we're at, everybody wants to predict what's going to happen next.
Right. Can't do it. So good. So number one, call your advisor. If you're freaking out, if you're nervous, call your advisor, right? That's good, Cory. Good advice. Let's pull up that plan. I don't think there'll be material changes, but trick question. That was a trick question, Cory. But let's pull up your plan. Let's revisit. Let's look at your allocation. Let's look at your behavior, your spending. Let's talk about all those things. And then number two, stop trying to predict the future, right? I can't do it. You can't do it. It's okay. You have to, embrace what's going on, live in the moment today, and make good financial decisions based on the information you have today. Good. Cory, what's our third tip?
All right. So the next one that I have is more financial based specifically, and that is right now is a great time to do tax planning, not only for this year, but into the future. And part of tax planning involves something called tax loss harvesting. And what really is involved with that is in a taxable account, so not an IRA or a Roth IRA, but in a brokerage or an investment account, if you have assets that have declined in value, evaluating tax loss harvesting basically just means selling something that is down in value, realizing the loss, using that to offset capital gains. And there's also the potential to carry losses forward into future tax years.
Yeah, really good. Yeah, so it's a technical strategy. Don't go at this alone. I'll give it to you, Cory. I'll give you, because we don't have time. I mean, tax planning or tax loss harvesting could be literally a topic of an entire show of Upticks. But what Cory's getting at is that you can seize this as an opportunity from a tax planning perspective. So again, there's a lot of rules that go along with tax loss harvesting. You can do an IRA to Roth conversion right now. We have third-party tax planning software that our financial planners operate for our clients. They've done over 100 of these already this year. We'll take your 2021 tax return, we'll scan it in, and then most importantly, we can run these projections. Well, what if we realize some losses by tax loss harvesting? What if we do an IRA to Roth IRA conversion? We can take a look at all of these planning opportunities now to take advantage of some of your assets being down in value. So again, that's really good point, Cory. So again, tax planning, we're in the fourth quarter now, or entering the fourth quarter as of the recording of this episode. Let's do it. This is the 3 months to get in there, take a look at your situation, and see if we can help save you money on your taxes, which will hopefully dampen some of the losses that we've realized this year. Good one, Cory.
What have you got next, Jake?
All right, good. So my next one would be knowing what you own. Because a lot of people will look at their accounts and yeah, I don't like it. Your account may be down 9, 10, 11%, whatever it is, but you have to realize, and by the nature of Falcon Wealth Advisors, and I'm really proud of this, frankly, is that the fact that we're not using products, we can show you certain stocks or certain bonds that may potentially be up in your account. So let's say that you do need money for taxes, or maybe you were already planning on buying a car, or you need a car, or whatever it is, and you need to pull from your account. We can literally pick and choose certain investments to sell that may not be at a loss, Cory. Maybe they do want to realize a gain, or maybe they don't want to sell something at a loss. So it's important to peel back and know what you own, and we can literally zoom in. I talked about zooming out. Now you can zoom in and fully understand and appreciate what has done well and what has done poorly and why. And that also brings me kind of into the same tip, is that understand that there's income being generated in your account. So even though those bonds may be down in value, they're still generating an interest payment. And when those bonds mature, the good news is we're going to reinvest those bonds in new bonds, hopefully paying much higher interest. So again, the tip here is know what you own, know why you own it. We can happily zoom in for you and go over each and every one of your investments. And that's a big reason why we don't use products at Falcon Wealth Advisors. If you're an exchange traded fund, an index fund right now, you're riding this ship down and you don't have individual lots or individual stocks. Lots would be something different. Individual stocks to pick off and choose from that. If you're in a mutual fund, you're at the mercy of the mutual fund. I heard, Cory, the other day, and I don't know how accurate this is, but I heard it on the news, I believe, is that 90, or maybe a podcast or something, but 90% of mutual funds are underperforming the market this year. That's horrible, right? Wow. And if you're an index fund, you're just riding it down. And so, again, our compliance doesn't let us report our performance because it's individualized for every client. But I can show you our performance doesn't look that bad at all when we're comparing it to other benchmarks. And again, it's individual basis. Some may look better than others. Some may be worse because there's some nuances there. But I would encourage you to know what you own, compare it to the benchmark, and let's zoom in on your individual holdings. Sometimes that helps people get through these types of market cycles when they understand what they own. Good. You got another one for me, or we're exhausting them yet? So let's do a quick recap. Sorry.
Good idea.
So number one, call your wealth advisor, right? If you're not working with a fiduciary, this is the time to fire your broker and work with a fiduciary advisor. So again, that's what we are at Falcon Wealth Advisors. And what a fiduciary means is you're acting in your best interest. You got to be careful of brokers right now because they may just sell you something to generate a commission. So now is not the time to be talking to a broker, in my opinion. So again, meet with your fiduciary wealth advisor. 2, stop Stop thinking you can predict the future. Stop asking Cory or me if we can predict the future. We can't. You can't. Embrace the moment. Let's make good decisions with the information that we have today. 3, take a look at this from a tax loss harvesting or tax planning opportunity. Your friends at Falcon Wealth Advisors can do that for you now. So Matthew, Jake, and Joe, they do that. They have those meetings with our clients. Cory and I aren't involved in that. Those guys are laser focused on tax planning, and they can walk you through it. And then the 4th thing is zoom back in and know what you own and how it's doing on an individual basis. If you really want to get that granular and you're concerned, let's talk about it. I can show you stocks that are up this year. Not everything is necessarily down. All right, Cory, you got another one?
I do. Yes. And this one just, again, speaks to opportunity, because maybe we haven't talked enough yet about how obviously downturns like this present opportunities for the future. And I think looking at the situation opportunistically is a good idea. But specifically, I want to talk about something that you just touched on not too long ago, Jake, about how obviously interest rates are higher now. I think that now is a great time for people to evaluate their cash holdings. One, whether they choose to take cash and invest it because the market's down. That may or may not make sense for someone's financial plan. But 2, understand the interest rate that you're earning on your cash. With yields and rates moving so much higher this year, there are more and more opportunities to earn real interest on your short-term cash holdings. And this is the time to evaluate, where's my cash at today? How much interest is it earning me? Should I invest it in the market? Or should I just simply hold the cash somewhere else where it can earn more interest?
I love it, Cory. Good. That was one of mine also. So again, and it's interesting to me, I don't think a lot of the banks are quick to pay more interest. And frankly, it's because the Fed has been so quick to raise rates. They probably haven't had time to catch up, or frankly, maybe they don't want to pay it. I don't know, but you're right. You may be on an online bank because it's paying you 1 or 2%, but we can do a whole lot better than that now through treasury bonds or I bonds, which I know you've done a show on its own. And so you're right. Take this as a huge opportunity. And if you've got excess cash built up that you don't need anytime soon, I would highly encourage you to, again, call us and let's talk about deploying maybe some of that in stocks while they're on sale. You got to remember, the market's only had a negative annual return 2 years and the last 15. And so if you look back, those were buying opportunities because every other year it was up. So let's take this as an opportunity. And again, I don't want people to get over aggressive. I don't want them to throw their financial plan out the window. I'm not telling you to do that. And I'm glad this wasn't our first tip, Cory, and it was our last tip. But again, you drive a really good point. Let's take a look at those cash withholdings. If you have $50,000, $100,000, $200,000 sitting in cash making 2%, you can do a lot better than that right now. And you can go anywhere from relatively low risk in a treasury bond to ratchet that sucker all the way up to individual stocks. And so there's a lot of opportunity. Let's seize that opportunity and use this as something to actually set up you and your family for your financial plan to actually look better in the future versus worrying about what it looks like today, right? So that's a really good one, Cory. That was one of mine also. So again, I got to give you a 2 thumbs up for that one.
Thanks.
But good one there. And I think that, and we are winding it down. I know you've got a team meeting today. I'm working out of the office, obviously, so you got to hold the fort down there. But to wrap up our show, again, I want to do another quick summary. Call your advisor. Let's set up a meeting. If you're not working with Falcon Wealth Advisors and you're watching this, you can email me directly at jake@falconwealthadvisors.com. I'm happy to share my schedule link with you. Cory's is simply Cory, CORY, @falconwealthadvisors.com. We don't compete with each other. We're both wealth advisors, both leaders at Falcon Wealth Advisors. We're happy to meet with anybody. So number 1, let's set up a meeting. Number 2, stop predicting the future. You can't do it. Let's work on the information that we have today and make good financial decisions based on that. 3, do some tax planning. 4th quarter, it's not too late. But if you wait until December 31, it's too late, right? Or the day after, it's too late. Let's do it now. Number 4, number 4 was zoom back in. Sorry, there's so many of them. 4, zoom back in, know exactly what you own and why you own it. And then the last one, Cory, let's take a look at that cash holdings. If you get too much cash built up, let's start maybe looking at deploying some of that, making some more money on that cash. Very good, Cory. Is there anything else as we wrap up today's show that I missed?
Nope. I think that's a good summary. You did a pretty good job. I was trying to think as you were going through them, if I could recite all 5 in a row in my head too. So good work.
No, thank you. And what was tough is that I challenged you a little bit and myself is that we didn't, normally we could compare notes, right? Because we're not recording this live, but or we are recording live, but we could edit it, but we didn't do that. And so I wanted just to see where you were and where I was, and we came up with some really good tips in there. And again, this holds true for our clients. So thank you again. Thank you for joining me on this episode of Upticks. Thank you all so much for tuning in. Again, this too shall pass. We'll get you through it, but don't let things fester and don't make irrational emotional decisions right now. That can really mess things up, and we don't want to see that happen for anybody. Thank you again, Cory. Good luck on the paddle tennis. Stay warm out there.
Thanks.
And thank you all for joining me, and we hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.